All right, well, good afternoon, everyone. Welcome to our OFR Regulation webinar. We are excited that everyone has registered and are attending this. We have some great information. We have the honor of having Jesse Liu, Financial Examiner, Analyst Supervisor, and Paul Rhodes, the Financial Administrator of the OFR. We have had a really important, long-lasting relationship with the Office of Financial Regulation, and as a result of that, we are able to provide webinars and information tools such as today to all of you as licensed originators, wholesalers, broker owners, and anyone that's really an industry partner. We want to remind you that we will have a few housekeeping items. If you could at least mute during this process. We will have questions at the end if time is providing. You can type those questions into the chat and we'll be monitoring those and asking those as well. In addition, there will be this information and materials that will be provided to the members after this webinar and will be on the website as well. So in an interest of time and getting all the great information that we're going to hear today, I'm going to turn it over to Jesse Liu. So Jesse, the floor is all yours.
All right, good afternoon all. Paul and I will first introduce ourselves because normally you only see our Bureau Chief Andy Gromeyer or our Director Gregory Oakes. My name is Jesse Liu. I graduated from Florida State University and I majored in finance. I remember the last year in college, that was right at the real estate crisis. Our investment professor will come into the classroom with his Wall Street Journal and tell us with his deep voice that another
Jesse, you're muted.
Yeah, you're muted, Jesse. You must hit.
I'm so sorry.
That's all right. Jesse, it happens to all of us.
What?
Jesse, you were muted right about where your professor came in.
Oh, my professor. Yes. He came in with his Wall Street Journal in his hand and he told us with his deep voice that another big financial institution just filed bankruptcy. So that's all I remember about college. Right after college, I joined the OFR team. I started from registration. When 2010, all the licensing transitioned into NMLS, I was part of that team that reviewed all the applications that flooded in. Later on, I moved over to enforcement. I reviewed the compliance filings such as financial audit report, call report, mortgage, quarterly report, and surety bonds. After that, I became a field examiner. We went to the company's location and we conducted the field exams. Just a few years ago, I was promoted to be the supervisor of the consumer complaint and compliance section of the division. So that's me. I will turn to my co-presenter, Financial Administrator, Paul Rhodes.
Good afternoon, everyone. My name is Paul Rhodes. I've been with the Office of Financial Regulation for 12 years now. I started out as a field examiner and worked my way through a couple different senior examiner positions and became a regional manager over the Orlando region for a couple years. And now I'm the financial administrator. I basically manage the regional office examination staff that go out and examine the licensees. Before I came to the OFR, I was actually in your industry. I'd worked in your industry for 15 years. And I wanted to show you, I was a member of your organization way back in the day. And as we were getting ready to start this presentation, I remember the one time I had to go in front of the OFR and all the training and all the great information that I had gotten from FEMP came into play and helped me keep my business going, and I knew what to do and what to say. So I want to give a plug for the organization. They're really out to help the members of the industry with a lot of good information, and I definitely would give it a plug that it is worth your time and effort and money to join the organization. Go ahead, Jesse.
All right. We do have a general disclaimer so the information we're providing today is in summary form. It's current as of the date of the presentation. This information presented should not be construed as a legal advice, legal opinion, or official interpretation of the statutory provisions. The opinion we're expressing here is our opinion is not necessarily the office opinion. All right, let's get into it. So today our hot topic is a periodic compliance filing mortgage call report. So here's our agenda item. For the industry professionals, I'm sure y'all live and breathe these filings. I will go over some basics, but I promise towards the end, I will give y'all some good regulator insights. So let's get started. What is a mortgage call report? There are two components. Residential mortgage loan activity. This is a statewide data regarding your origination, closing, servicing, your loan originators, repurchasing. And the financial condition report is more like a company-wide balance sheet income statement information, okay? Who are required to file? Any companies that's licensed with Florida as a mortgage company, they are required to file the call report through an MLS. So the Florida statutes that governs these requirements is 494-0042 for brokers and 494-0067 for 6710 for lenders and servicers. So the statutes basically says mortgage broker and mortgage lender shall submit to the registry is NMLS, report of a condition, which is mortgage call report, which must be in search form and shall contain such information as the registry may require. So this is how the Florida statutes basically adopted MCR form from NMLS. As of July 1st, here is some registration data. Florida has about 53,000 loan originators, almost 3,000 brokers, 750 lenders, and 475 servicers. So other than the loan originators, all the companies are required to file the call report. The deadlines, these are the very, very basic. So on the deadlines, the basic of it is, if it's a quarterly filing, it is due within 45 days after your quarter ending date. And for annual filings, they are within 90 days of the fiscal year end date. On the financial condition report, there is a caveat. If you are a Fannie Mae, Freddie Mac, Ginnie Mae issuer, then you are required to submit an expanded report. The expanded report is a quarterly report. And then the rest of the mortgage lenders, they are required to file the annual financial condition report, which is a standard report, okay? So on the annual filing, the deadline is based on the fiscal year end date that you entered into NMLS on your MU1 form. So if you inadvertently give us a wrong date, a wrong fiscal year end date, we may be contacting you for a report that's caused by that filing error. So make sure your NMLS filings are up to date, like your fiscal year end date, your contact information. So you get proper notifications for renewal, compliance filings, license item, like those deficiencies that we post on NMLS. So make sure your filing, your MU1 filing for your company is up to date. The same with your individual filing as well. And per Florida statutes, any information that's changed on your application form, that is MU1 for company and MU4 for loan originators, they are required of an amendment. If there's anything changed, they're required of an amendment within 30 days after the change is effective, okay? So make sure your information on NMLS is up to date. Make sure you update your record timely. Paul, do you have anything to add on this?
Yes, as Jesse just said, again, if there's any changes within 30 days, quite often my staff will call to set up an examination, and of course we'll be verifying like the address. Oh no, I'm no longer at that address. I've moved a year ago. Everything's going so well. I've got bigger, better space. Well, unfortunately, you need to tell the office within 30 days that you've moved your office. So those are some of the things that you need to tell us timely.
Okay. All right. So every single thing you need to know about the mortgage call report is on the NMLS Resource Center. I don't claim to be the expert to know every single thing about the call report or NMLS, but I know the NMLS Resource Center is a place you can find every single thing you're looking for about their system, about all their filings, and the Resource Center is the expert. So on this right here, I have the website for the Resource Center, or you can Google it. It will pop up on the very top. So for example, on this mortgage call report, if you go to the NMLS Resource Center, click on the call report, they give you 5 category of information. So are you required to file? What is it that you are required to file? The deadlines, when is it required to file? How to get yourself prepared and how to make that final submission. It's a lot of good information. So when a licensee call me, this is a place I go to as well. So this is besides a call report. The NMLS Resource Center, I am a huge fan of it. It has so much information on there. A few useful items I want to point out to everybody. So let's say if you are interested in being licensed in another state, you can go to the Resource Center on top of the page where you see it's right here. If you click on state licensing, it will give you a US map like what I have on the slide. If you click on the state, it will tell you what type of license they regulate. It will tell you the licensing requirement. It will give you the state regulator's website. So it's very insightful. On the same state licensing area, after you click on it, it also tells you what state utilize NMLS system for what license type. For example, half of the U.S. states utilize NMLS for money services business, like money transmission, like Western Union, PayPal, all that. And then a group of states use NMLS for consumer finance license. We're talking about those signature loans. And a group of U.S. states use NMLS for debt collection agency. So there's a lot of information sharing here. That's why I'm a huge fan of the Resource Center. A lot of good information on there. So back to the mortgage call report. Once you are on the Resource Center, on the right-hand side, there's popular links. You can click on mortgage call report. It will take you to this page. Like I said earlier, it gives you 5 categories of information. Are you required to file? So there's a link right here. I don't know if you can see it. It says it's a state MCR requirement chart. It's a Excel sheet. You open it up. It will tell you, if you sort it just by Florida, it will tell you mortgage broker, mortgage lender, and mortgage servicers are all required to file the call report. We went over what to file and the deadline already. So we move on to item number 4, get yourself prepared for the filing. So on this item number 4, it gives you a sample call report in PDF, give it in Excel. In the form itself, in the sample itself, it gives you some guidelines. And this it does give you mortgage call report definition. It's in a searchable PDF format. It gives you uploading specification. It gives you sample by business model. So my favorite item on this whole page is the MCR definitions. So I will expand on that a little more. In short, it's called mortgage MCR definition. It is actually an NMLS mortgage call report field definition and instructions. Not only it gives you glossary of the terms that you will use throughout the filing, it gives you the field definition, meaning on your RMLA, every single thing you are entering into that call report, there's a definition for you, there's an instruction for you. So it is very helpful. It has a separate instruction for financial condition report as well. So I pulled up an example, one of the example. Let's say I'm not sure, I have this call report opened up. I'm not sure what is AC020, what is application received. So you can go to the MCR definition, the searchable PDF format, and then you can search for AC020. It tells you that application received is application you received during a period received from third party or directly from the borrower, right? So you might also be wondering what is exactly is considered application. So I did another search on application. As you can see, it's a very detailed instruction of what is actually considered an application, what NMS require you to put on a mortgage call report, what to include and what to exclude. Here you go. Every single thing you need to know about that AC020 is right here, okay? So what happens if you don't file your mortgage call report? Or so first thing, NMS will post a license item. It's an outstanding deficiency on your record on NMS that you did not make this filing. The license item will only disappear if you file and submit your filing. Okay. I will add this. I would imagine you guys are very curious about this question. Does the MCR license item affect your renewal? The answer is no, it does not. Okay. So ultimately, what happens if you fail to file your required call report or fail to file it timely? On my screen, this is a disciplinary guideline for mortgage loan originator and mortgage entities. If you're not familiar with that, I will show you guys where to find this. So we will just briefly go over the first one. So violation number 65, statute 494-0042. This is for the broker. It basically says if you fail to file the call report pursuant to the requirement, the first time you are being late, you submitted late, we will give you a notice of non-compliance. The notice is a paper letter or an email letter. It tells you that this is the first time you are being late. It's like a warning. There's no money penalty, no monetary penalty involved in this letter. Okay, that's the first time when you are being late. It's a fair warning letting you know there is a requirement you file this. So the first time, if after we emailed you, we called you, you still don't file, it goes to a fine. Fine A right here, look at the footer. Fine A is a fine, $1,000 to $3,500 fine. So the second time you are being late or you are not filing, it automatically goes to a fine and possible suspension up to 90 days if you don't file. And then after that, more fine, suspension, possible revocation of your license. Same thing with a lender. The first time you are being late, it's going to be a notice. And, after that, it's going to be possibly fine, suspension, and revocation.
Hey,
so
Jesse?
Yes.
We do have one question that might be appropriate now. Do you mind if I ask that?
It's not at all.
How long does the first citation stay active?
I think there is no time limitation on that. Paul, correct me if I'm wrong. So if the first time we send you a note of non-compliance, you are never late for 10 years, and then you are late again, it goes to your second citation. Paul, is that correct?
Well, in other chapters, we do have a 5-year term. I can give you the extreme. If it's the next quarter, yeah, I'm sorry, you're out of luck. 10, 20 years, some amount of time that the office may have some discretion to issue another notice of non-compliance, but realistically, definitely within a 5-year period, we're going to say, hey, this is your second or your third.
Linda, does that answer your question?
I believe it does. Yes. If that doesn't to the individual, just type in another question. So, but
Okay.
yep, all set. Thank you very much.
Right. So the point is, file your call report. It is such an easy finding to avoid. File it timely, file it accurately. Though the state statutes and the rules does not require OFR to send y'all reminders. As a courtesy, we do that. My examiner on like 15 days before the due date, we send out so many reminders, and if you still don't file, we call you. And there's really not a whole lot more that we can possibly do. Paul, do you have anything to add about the disciplinary guideline?
Yeah, I actually have a couple of things to add. First of all, in order for us to take this easier route out that doesn't cost you any money, and it's not a, when you have something against you and you have to report, it's not a reportable offense in the state of Florida's eyes. We want to handle it for what it is. It's usually you were late or you were slightly inaccurate. A couple things. You must be able to fix it in order for us to offer this option to you. Meaning, for instance, if it's inaccurate, we need you to go back in and put in the accurate information. Now, if it's late past a 2-year period, the system won't let you go back and correct something that's over 2 years old. We understand that, and we will issue the notice of non-compliance. Now, a couple other things I want to reiterate, as Jesse was saying, see how the fine and the suspension or revocation could take place if someone is a habitual abuser of not filing this report. And I'll give you a tip here that will be worth your time today of attending this event. Jesse, like Jesse said, she tries to reach out to the industry and say, hey, you're going to be late. But imagine what happens when she reaches out. She reaches out, then she comes across the hall there or picks up the phone and says, Paul, hey, listen, we've got some people that they were doing all kinds of business, but they haven't reported after repeated reminders. That then you go on the radar. So you might get basically what I'm trying to say is you might get a knock on your door from one of my examinations because now there's a red flag. You were doing a lot of business, now you're not reporting any business, or you were reporting it inaccurately. So that stay off the radar, do your reporting timely.
All right. So we'll move on. So for the past 5 years, the desk exam we opened on mortgage call report related issue. As you can see, this is a vast majority of the exam we have to open. Altogether, for 5 years, it's over 1,000 cases. The second most amount of the issue we see is financial audit reports. Similar, either they didn't file timely or they didn't file. For financial audit report, if you don't file, it's a revocable violation. So these are the type of desk exam we conduct here in Tallahassee. So my point back, it is such an easy finding to avoid. Just file your call report. Paul, does our field examiner see anything interesting in the field, like related to this?
Yeah, they do. You know, actually, as I mentioned earlier, a lot of people move their office. There are other things we see. For instance, record storage. I remember in my days when I was a mortgage broker and had a mortgage broker business, there was a point I had to store records somewhere else. I know everything's electronic now, but back in my day, we had these thick files that it was like gold because you hope to do business with that person again, and you save those files. So where are the records stored? A change in control person, that could happen too. People come and go. So when certain control people come and go, you need to notify the office.
Okay. Let's move on. So the mortgage call report related finding, we have the late filers, we have the non-filers. We also identify if there's any inaccuracies. So like I said, for the late filer, non-filer, 15 days before the due date, we started contacting already, emails after emails and phone calls. And then inaccuracies, an experienced examiner can spot inaccuracy very, very easily. So I will ask Paul to show you guys how easy it is to identify discrepancies.
Okay, so this is the view that you're going to see when you put in your data. And so from the time to time, you put in your data, your quarterly data, and this is the view you see. So when my examination staff go out, they compile this data and they're looking for consistencies. So just as an example here, look at that first quarter of 2017, the first line. You basically start out with a certain amount of business. You bring in some more business. Some business is denied because, hey, they lied about their income. Some of them you lose to the competition, they withdraw. And some of them you get closed. And so you're going to end up the period with a certain amount of business that is still in process. Well, if you end a period with a certain amount of business in process, logically, the next quarter, you're starting with a certain amount of business. And so where we see the discrepancies is where there's a difference in the change from one quarter to the next. Jesse, do you have a slide pointing that out, or should I just tell them? Okay, here we go. So if you notice here, that second quarter of 2017, there's one difference in the beginning of the third quarter of 2017, the third line. And that could be an easy mistake. There's maybe you didn't quite have it right on the beginning or the end, but look, drop down to the first quarter of 2018. Now you're telling the office that you are ending the quarter with 27 loans in process, but now you're starting out with 40. So the 13, there's quite a difference there. Where did that business come from? So yes, Jesse, it is very easy for us to see the discrepancies. We just put it in a spreadsheet like this, and it should all add up to the next quarter.
Okay. All right, so what is the mortgage call report for, you may ask. For licensees, you guys are informing your regulator of what you do, the volume, your loan originators. For regulators, based on the information you submit to us, we perform some trends analysis. The trends that we see all kinds of stuff. So we have superstar loan originators. So on average, loan originator originate about 21 loans per quarter. For example, we see superstars that they originate over 200 loans per quarter. So that's possibly a red flag for us to identify unlicensed individual, possibly. We also do standard, data analysis, your average, your sum. We also see unlicensed loan originators originating loans. We're talking about people have a pending application, people registered on NMLS, has an ID number and never even bothered to submit an application. We're talking about people are terminated and they are still originating loans. We do see these information based on the call report. The zero report is after the quarter ending date, within the due date, 45 days, company will go on to NMS and click on this button. This quarter, I had a zero activity. So click on the button, submit, it's done. And after the due date, they come back and putting in the real number. If we see this on a routine basis, it is a red flag for us and we can easily identify these issues. So we're getting into the trends analysis, my favorite things. So this particular chart is, if you look at the second highlight, it basically tells you that in 2020 Q4, this person originated 186 loans in the total amount of $53 million, and the person is not licensed, not sponsored. So where is this person coming from? So these are the examples of red flag that we see. I can tell you in the past, when we looked into these issues, a lot of them are data entry issues. People just enter the wrong information. So if that's the case, we'll just encourage them to correct your information on NMS, and then now the record reflects the correct information. But we do see a few cases we did establish finding that they are actually conducting unlicensed activities. It is always so interesting for me to see trends over time. So as you can see, 2016 Q1, it was pretty much half home purchase, half refinancing. Over time, a little more purchase, a little less refinancing. And then you went to end of 2019, early 2020, the rate drop. And then the refinancing just went through the roof. So when we see rates drop, volume goes up, people spend more money. Normally it's such a good thing, but transition into COVID-19 remote working environment in such a hurry in early 2020, no one was prepared for it. In early 2020, I remember going to a multi-state regulator phone call. The person, I don't remember which state, but the person basically told us, I was stopped in the middle of the street because I was deemed non-essential worker. We hear from our licensees that they don't have a phone staff, they don't have enough phone staff to answer calls, or they are not equipped to answer phone calls from home. We hear from some of the licensees representative, they're using personal cell phone to call the regulator and to call the consumers. We hear from the consumer complaints that we receive, that they can't get hold of our licensee via phone or email, and they are not being contacted in a timely fashion. So this is not unique to just the mortgage industry. It also our other licensees, for example, money services business, money transmitter. In 2020, who did not use PayPal, Venmo, Cash App, Google Pay, right? So we're getting the similar concerns on those companies as well. So I remember the first few months we start hearing, companies are not answering phone calls and not calling people back. I couldn't believe it. So I picked up the phone and called a big company myself. They recorded a message says, due to high call volume, we're unable to answer your phone call. Please call us again later. And then hung up. This company does not have my mortgage. They don't have my money. I was pretty frustrated. So you can only imagine the frustration level from our consumer that they are trying to get an answer, they can't get it. So the good thing about the whole thing is that most companies during this whole period, if they were having issue, if they're experiencing issue, not having phone staff, unable to call people, they kept communication with our office. They responded to our complaints promptly. We are hearing these issues less and less. I mean, honestly, at this point, we're all remote working pros, right?
Jesse, we have a question.
Yes,
I think it is on the data analysis report that you have here. It says, can we review this? Can we review this each quarter?
Which mean?
I guess review the data analysis report.
Can we review this each quarter?
That's what the question is. I guess, is there a location to where the licensed originator could review this data analysis?
No, ma'am. These are regulator data.
Okay, the beginning and end reports for his company. Okay, all right, yes. We've got it. Perfect. Thank you, Jesse.
You're welcome. Okay, so the pandemic, not only it brought additional unique issues like forbearance, it also created so much problems for the most basic workflow, such as a business phone call and a paper letter. For a while, we are hearing our licensee telling us we can't send that paper letter to those people who don't have email anymore. It is very frustrating, but like I said, they are responding to the complaint inquiry timely. So I would never imagine in a million years that year 2020, we are unable to make a business phone call with a video camera. So our office actually transitioned fairly smoothly. Our commissioner acted quickly. Our people were sent home with proper equipment. We had an IP communicator for phone calls. So here we are like a year and a half later. So hopefully the pandemic is going to be over soon. Paul, do you have anything to add?
I have a question for the industry, Linda. As I looked at these numbers when Jesse and I were talking about what we wanted to present to you guys today, my question is, looking at the graph here, it doesn't seem like the home improvement is maybe accurate. I just wonder, do a lot of people, and this is kind of based upon my experience when I was in the industry, that a lot of people took a refinance cash out and they just took the cash and did whatever home improvement that they planned on doing. Is that still the case, or is there really, the home improvement loans have grown? I see a little bit over the years, but it seems like, from my experience, that a lot of people, like in today's market, hey, let me get a better rate, let me take a little cash out and redo my floors, which is basically what I did just 90 days ago.
Exactly. I think you're exactly right. There's a large percentage, especially with the values that have increased over these, last several months, that the cash out, and prior to some of when the GSEs hit us for some additional basis points on that, the cash outs are there. So the cash outs were to do exactly that. And you see that all over the state. There's a certain amount that do a construction perm loan, and that's going to probably go through most of the bank resources and sources, or they're getting a commercial type of loan, and none of, that type of data is not going to be on here.
Gotcha. Okay. Thank you.
You're welcome.
Good information. All right. Here is a Florida mortgage loan originator account. As you can see right here, it says number of MLO with origination, meaning the loan, not only licensee, they have to be originating Florida loans. As you can see, as of 2021 Q1, we're about 25,000 mortgage loan originating loans. What's super interesting for me is, remember our early slides? Florida has 53,000 loan originators. Only half of them are actually originating. So that was very interesting to me. Here is some other analysis that we see. So for example, this is a servicer risk profile. Let's look at row number 1. It says this company has about 89.5% of a market share of loan service. They are licensed in 53 U.S. state and territory, and they are actively servicing in 46 states. And the percentage of loans they're servicing that's 90 days delinquent is 8.3%. Okay. Then if you look at row number 3, this company with a market share of 1.4, licensed in 39 states, servicing in 27 states, 100% of the loan they're servicing are 90 days delinquent. So to me, that's a red flag, something for us to look into. Maybe it's a data entry error. But these are some of the trends that we see and the analysis that we do based on the information submitted through NMLS on the mortgage call report. So Paul, do you have anything to add on servicing?
I do, Jesse, thank you. Back to the importance of the accuracy of what we need the industry to load into the NMLS. In this example, okay, 1.49%, that's not the end of the world, but if you think about it, this company could be in trouble. If you've got a large amount of your portfolio that is not performing, you're going to have a problem. We could have bankruptcy problems. And large servicers, if they get into a cash flow problem, the escrows can't be met. If someone's not paying their mortgage, guess what? Their escrow's not there. So they can't pay their property taxes. They can't pay their homeowner's insurance. You could run into some insolvency issues, like I said. And so there are other things that we are looking for to try to prevent We have a limited amount of manpower. So the more accurate the information is, we know where to put our resources, so to speak.
Yep. All right. The questions that we hear from our call center, my staff, and myself. So we hear this on a regular basis. Do I have to file a mortgage call report? Yes, if you're licensed, you're required to file because it's a statutory requirement. What happens if I don't file? I will show you exactly where that disciplinary guideline is. It's on our website. Is there any extension? No, the problem with that is the statutes doesn't provide any extension. So none of the people like me, Paul, Andy, Mr. Oaks, we cannot provide any extension unless it's a unique situation like COVID-19. As an agency, our commissioner issued emergency order in 2020 to provide extension for all licensees for renewal and specific quarterly report and mortgage call report. So on an individual basis, there's no extension. Do I need to file if I had a zero activity? Yes, absolutely. I'm pretty sure there's a button. It says zero activity, and then it's a super quick submission for you. MS made it easy. Do I report commercial loan activity? That actually depends. Commercial loan activities are listed under other mortgage loan in the expanded mortgage call report form. Remember, those are your Fannie Mae, Freddie Mac, Ginnie Mae issuer. They are required to submit the expanded call report. So for them, did I freeze? Okay, so for them, they are required to submit commercial loan activities. Okay. Do I enter repurchases? Yes. On the call report, in the call report, there's a section for repurchase information. I completed everything. What do you mean you don't see my filing? We hear this so often. All the good company, I swear, when we call them, we pick up the phone, call them, they're like, I did everything. It's already submitted like 15 days ago. And then what happened is once you completed everything, you save it. It's a draft filing. Before you click on that final submit button, we are not going to be able to see it. It's a non-filer for us. So just make sure you click on that final submission button. Okay. All right. So here are the resources. Like I said, if you have any questions on mortgage call report, NMS system, NMS Resource Center is absolutely the best place to go to. So check it out. If you have any questions on the NMS system, there's a phone number you can call. They do have a phone staff or OFR website. So recently we had a change from flofr.com to flofr.org. .gov. Sorry. So on our website, that's where you can find all the statutes and rules and disciplinary guidelines. So if you are on our website, if you are, as we were talking, if you're on our website, you go to our website, you click on consumer finance, because that's what mortgage fall under. You click on consumer finance, and then you click on your license type. We have a loan originator, broker, lender. You click on it, and then look on the bottom. Towards the bottom, it has all the state required form. It has Florida Statute 494. For the rules 69V-40, it has a disciplinary guideline. If you're not familiar with the guideline, please take your time to read it. These are our penalty guidelines. If there's any violation of the 494-4 statutes, that's what we don't have any discretion. That's what we read. That's what the statute provides us. So let me see. If you have questions for OFR, we do have a phone staff, and here is a phone number. Let me see if I missed anything. This is it. That is all I have to say about the call report. Do y'all have any questions for us?
That was excellent. So Paul, there aren't any questions right now in the chat. We've had the two. Oh, I've got one right now. There it goes. Off-topic question. My company is a lender. We haven't yet been approved. Where does the state stand? I guess on all those applications that you're receiving every month, you know, is there a time frame on those?
Jesse, let me take that question if you don't mind. Linda, obviously, this is crazy times. If you saw those numbers back to the 50,000, we've actually taken field staff and are lending them to our registration to try to keep up with the demand. The state of Florida does apologize that we know we're not operating as quickly as we'd like, but we are putting more resources into the application process, and just please be patient with us.
Right. Right. I know that. I mean, I know when we met in Tallahassee, the numbers were climbing then. And I think they were and this was just a few months ago. So, you know, they were probably in the high 30s, and to be at 53,727 is that's incredible. I asked Greg Oakes at that time where he thought the numbers would be by year end. And so this seems to be a little more advanced and higher than, you know, than I probably anticipate. So I'll ask you the same question, Paul. Where do you think the number is going to be in licensed originators by the end of 2021?
I'll ask you a question, Linda. How long do you think the rates are going to stay down?
I think through 2021.
Well, then it's going to keep climbing.
It's going to keep climbing. And I found it very interesting when you said also, Jesse, that half are, as you said, are really originating. So the other half just continues to renew their license and so forth. You know, I'm surprised we haven't seen more drop off.
Yeah, I'm surprised. When I told Andy about that, Andy was so surprised. So we have no idea why the other half of the people are not originating Florida loans.
Right.
We're thinking they're probably licensed in pretty much every single state, just in case they need to originate.
Right. Yes, that is probably the case as well. Yes, that's a good point. And there's a couple more questions, but go ahead, Jesse.
Linda, I do want to give you a perspective. So
okay.
On the application. So I hear from my coworker across the hall that last month, I want to say 100 applications came in. And we have about 10 staff review those applications. Those are only applications. We're not even talking about, we're only talking about the loan originator application. There are company applications, there are other type of applications, you know, they are working really, really hard.
Right. I know that you guys are. There's not anyone that I've ever spoken to at the OFR when I've needed something, and this is long before we've, you know, been involved with FAMP, and everyone is always very helpful. And I know you're very busy. So a couple questions here, if you do not mind. Can citations be appealed?
Paul?
There is a process. Absolutely, there is an administrative process in which a company or an individual can go before an administrative hearing judge and plead their case. Absolutely.
Okay. All right. Are these filings something I need to worry about as an LO, or is it handled by the broker/lender I work for?
The call report filing is required of a business, mortgage business only.
Okay.
Not as a loan originator.
And how about loan processors?
Individuals are not required of the call report filing.
Okay. All right. Just to clarify, my company has been approved since 2004. We renew each year. Our renewal for 2021 hasn't yet been approved by the OFR. I think, and is there an estimation completion? I think you answered that, Paul, but you know, it will happen, right? And as long as it's being pending and submitted on a timely basis.
Exactly.
No one should really worry at this point.
That is exactly correct.
Okay.
If the licensee submitted renewal on time, as long as their license status stays approved, they are authorized to conduct the business.
All right. All right. I understand, you know, you're feeling like you're kind of on the tightrope waiting for that, but you know, no need to worry. So at this point, so there's not any other question yet. So if anyone has another final question, go ahead and type it in so we can get to this. I did have a question that was texted to me, which is primarily, you know, can we maybe talk about having you do this again, a webinar when the annual financial call report is due? Would that be something that you would entertain?
I believe so. We're
Okay.
always willing to reach out to the industry
Right.
and be as much of assistant
Right.
as we can be.
Good. I mean, these type of webinars, especially on call reports, you know, they're so important. And I remember when we met with Greg and the commissioner earlier this year, that was one of the things they asked us. A question was, what can we do for you? And one of the things to encourage people to file their call reports on a timely basis. And with this type of helpful information, hopefully we're doing that. And know that there's good information here. And if you have any questions, it's there. Somebody just said outstanding webinar, extremely helpful. Thank you.
Thank you.
And another question, why must we go through annual renewal process while other industries such as real estate only require every 2 years for renewal?
Okay. I can give you my standard answer because it's a statute required. One other thing about the mortgage, because I used to work at licensing, so I know this. So for the mortgage renewal, it's a manual process. Imagine your 50,000 loan originator come back renew all at the same time. Remember, we're looking at your criminal background again. We're looking at your credit again. We're looking at your disclosure again. That's manpower, and we don't have any saying in this. This is required by the statute. That's why we're doing it.
Right, right.
Linda, but if you also think about the type of information that you're gathering in your industry,
right.
There's the possibility for loan fraud, identity theft. There really needs to be the best screening process that we can offer the taxpayer. Your people are handing their whole life to you.
They sure are.
We want to be sure we're protecting the public the best we can in an efficient manner. Don't get us wrong. We don't want to stop industry and workflow and people borrowing money, but there needs to be some type of checks and balance of who's doing what out there.
Right, right. Exactly. And as you said earlier on our pre-call here, that now you guys have been released and you're back out in the field.
We are back in conducting exams. Hopefully we're not knocking on your door, but if we are, don't panic.
Everyone run, lock and run.
Well, I remember from my days of, oh gosh, when are they going to knock on my door? When are we? It doesn't have to be a painful process. We're not out to get anybody,
Right.
but you know, unfortunately, typically when we're coming, it's because of complaint. I think another thing that Jesse will tell you is sometimes people don't want to answer complaints. And that, of course, that's a red flag. When Jesse's group contacts you, hey, give us your side of the story. I was in the industry myself. I understand people are going to complain no matter what. If they don't get what they want, it's all your fault. And the office does not look at it that way. Everybody's got their side and the truth is somewhere in between. So
right.
Respond to us. We understand that we're not going to take consumers' word of they did this badness to me as gospel.
Right, right.
We want to hear what your side of the story is.
Well, and I think that's important for us to hear and for you to say. So we really appreciate that it's not, we're not found guilty, right away. So just because someone says that, again, files a complaint, but it looks like that we are through our questions, and I just wanted to thank everyone for being on this webinar. It was great attendance, and of course, thanking Jesse and Paul for taking the time to put this presentation together and to also, take the time to listen and answer our questions. And for those of you, just a reminder, our annual convention and trade show is September 1st through the 4th in Orlando at the Hilton Bonnet Creek. You can register for that on rfamp.org. And we will have the Office of the Financial Regulation there in some form or fashion. We're hoping live, but they will be part of our show as they are every year. And we will have some additional information provided by the office. And again, a great opportunity to be there and to ask questions and meet the individuals from the OFR. It's important to, to use your real name and your real company. so it's we're excited for that. So for all of you that are FAMP members, we thank you for being a member. We thank you for supporting your industry. And for those that are not, we really wish you consider to joining. It is not a costly membership, only $99. And this information that we bring to you and with our OFR relationships and the importance of such relationships, we hope that you can consider that. So again, Paul and Jesse, thank you very much for taking the time, and we look forward to seeing you again.
Thank you for having us.
Okay, you're very welcome. Bye-bye. Bye, everyone. Thank you.